TGIF, Alexander, Richard, how are you? Hugo, everyone? Who's glad the week is over? It certainly didn't feel like a shortened week, did it? Okay. Hi, Paul. Kay, how are you? So, I look at things on a weekly basis on a Friday. Hello, Raj. And, you know, we had a pretty negative week going on. We're right at the 2-week off number. Thought it was going to be a layup when we were 20 underneath it last night. Now we're right there at 45, 11, 30. I talked about that Tuesday. So we'll see if we're going to close above it, or it could still, we could still get some kind of failure lower. We're getting lower highs here now for the first time. This is really the first lower high back under yesterday's lows, 44.90. I think we could test the 44.40 level. The dollar, if someone puts a gun to my head, I still think we're headed lower. I don't like the fact that EG has rolled over. That's usually, telling you there's more weakness. Well, it is telling you there's more weakness in euro than cable. And to me, most bull moves happen with euro outperforming. The yen has been tough, right? Looked like we were going to break out, then looks like we're going to fail. I'd still go with lower, even though yields are up a little bit today. This was a feature, we had the NFP, looked like a breakout, turned out to be a false breakout. We're still putting in higher lows here. So, kind of a tough tape. Oil has been very schizophrenic. Look at these candles, and now look at where we are. So a lot of beach balls. The bears are trying to push underwater, and it pops right back up. Aussie still looking okay. Maybe we're going to get one more run. So I think a lot has to do with where's the dollars going. The two big events to me this week was the big down day in gold right here from resistance. And as long as we're under, say, 1808, I'd be a seller. I'm still looking for these levels down here. Silver, not so great either. Starting to look heavy to me. I want to see where silver's at. Should gold get to that 17.5 level? And the other big event, of course, was what happened on that big liquidation day in Bitcoin, this day right here. And right now it looks like it's in shock. We're not getting the same kind of flows here. And, back under this, I think it's a 50-day. We're headed lower. I would say that we could go to maybe, 78.6 back down here. This looks like this was 78.6 from the highs, and looks like Bitcoin likes this number. So looks heavy. Even Ethereum, although outperforming, looks heavy. Maybe we'll get to 2,500 there. But those are a couple liquidity events in my view, with Bitcoin and gold coming off. S&P's tried to, and they're recovering. Still think they're lower on the week. But kind of a choppy week, don't you think, Ryan?
Yeah, another one, isn't it?
Yeah.
Woke up this morning and tens are trading 1.29, and you're thinking, what's going on now? Euro sterling, we're talking about yesterday, possibly on its way to, having a look at 87. Now we're having a look at 85, perhaps. It's just you just can't spend 5 minutes marrying a trade in this market at the moment.
Yeah,
you got to get in, take some pips, and take the money while it's there.
Yeah. So dollar. Same type of scenario, pretty choppy after, the break that the last 2 weeks we've been down, trying to recover, but I don't know. To me, still looks like down. Still think we're headed down, even though euro has been the weak sister. So,
Well, what are the chances you hit that 92 level in Dixie and back up we go? And then next week we're talking about 93 again.
Yeah. It's this was a pretty good break, trying to dig its heels in, but not the greatest rally, although you could make a case that, this is A and B, and we're going to get one more rally before a fail. Anyway, and nonstop Nasdaq looked like it was trying to turn yesterday. And I think we're still lower on the week, but not by much. It's still the strength. It's funny, people are buying mega cap growth as a safe haven. Okay, that's what I'm hearing everywhere. They're the safe stocks to be in if things, the economy slows. So one thing I do want to show, and maybe it'll negate it today with NASDAQ being so strong, but as commodity and currency traders, we all know this one. It's this, Amazon, after the earnings gap, tried to get back into it and fill it, and then put in a pretty negative day. So we've been unable to fill the gap. Almost looks like it could be a right shoulder, left shoulder, head with a neckline, around 3,200, which would, we take out 3,200, then we're talking about 27 or so. So this looks like this could be a failing rally. Apple, a reversal day after a kiss of the wedge line up here, 2 down days. So we'll see if that could be negated. Microsoft had a pretty negative day yesterday. Looks like it's trying to roll over, but with that, today could be, could just negate it. Google still on the strength. Netflix confirmed but reversed, and Facebook, non-confirmations, glaring ones everywhere. So we'll see what happens. Smash and grab trades in and out. Be a scalper, Richard says. Monica, how are you? Haven't seen you for a while. Okay, anything else to comment on, Ryan? I mean, it's Friday. Not much. I rarely initiate new stuff on Friday.
No, I agree. I'm nursing a euro dollar long after the ECB yesterday because I didn't think it was hawkish at all. But I'm down at 18.30 and 18.15. Okay. And so I'm trying to test my patience, trying to get out above 18.50. I got a little bit off at 49. I'm just waiting for a break up. Aussie dollar's another one. We're knocking around this 74 handle, big level that's been support and resistance going back years. We've probably got resistance up to about the 15-20 mark. It's going to need a break above there. Yeah. But this is one I favour the long side, but when you get a dip, it turns you around. Last week or beginning of this week, it was dropping down, and you think, you don't want to touch it. And here we are back at 74. So I'm in two minds whether to try a short against this 74 or go long on a break.
Yeah, I mean, it's possible we're going to 76 if the dollar's going to 91. So, hasn't done anything wrong so far. Nice rally, shallow pullback. Looks like we could go again.
Looks like a nice refresh, doesn't it?
Yeah. So I want to bring in Steve and Stell, guys. Good afternoon to you. What do you think?
Hello.
Hey, Stell, what do you make of the week?
Once again, it was a bit of an anticlimax. We were expecting the ECB to give us something, and overall, it was not really enough to move the markets or to shake them. So, just like you guys said, the way to trade these markets is in and out, smash and grab, and get your pips. And unfortunately, for me, I'm not an intraday trader or a scalper, so I'm spending most of the time, taking care of the kids and the dogs and just watching the markets. Unfortunately.
Yeah, look at this whippiness. Look at yesterday's action in in WTI. I mean, it is a scalper's dream, but if you're trying to position here, then you think you have a breakdown, and now we're threatening the highs again. Yeah, I think it's emblematic of what's happening across the board in a lot of markets. Trendless,
just enough to take out the stops and go the other way.
Yeah,
every time.
Yeah. So that's what's happening.
Yeah, for me, it's very difficult at the moment, but I'm patient, and the one thing that I do think is going to go to where I've been talking about this for weeks. I think Euro Pound is going. I think Euro Pound is going to go to 83 handle anyway, and that's where I'm going to be actively looking to get long for the first time in years for the Euro Pound.
Good patience. Finally rolled over after this bounce. It looks like it wants a waterfall into it now. So, nice patience.
Yeah, let's see. And as for
how about silver? Where you still have the same game plan to add at lower levels down here around 22 or so? Do you think we're going to get there?
Yes, we were talking about this on the chat room actually about half an hour ago. Blake mentioned silver, and I said I'm still. I want to be long silver. I am long silver, but very small position. I've only got a third of the position I want. I'm long silver via ETFs and also long gold and silver miners, and they're all in the red now. But the way I trade. My last silver trade was down. What was it, 15%, maybe more in the COVID crash, and then 3 weeks later I was up 50%. So I'm not leveraged, and I believe in this trade, so I'm very happy to let it roll and let it run. And silver, I think if we do, it will be lovely if we got near 22 and a half. That would be a gift.
The silver miners imply that could happen. I like David Brady like this, for owning silver, the juniors, SILJ.
Yep.
And I could see one more drive here still on the daily. We have 2, and maybe we get one more shot down. So far, it's held the 50% level. One more break.
I'm along this one as well. I'm long SIL and SILJ, and they're both. Okay. I'm down on both, but the thing with this is you have to be prepared that if there is a risk off move, this is going to go lower quickly. Right. So you have to be quick, and you have to be. Look at the COVID crash. SILJ went to 5, I think, in a flash. So you have to be really fast and really, patient. And I don't think we're going to get there again, probably ever. But on a proper risk off move, these are going to go lower, and that's where I'm going to start accumulating more.
Looks like that's a wedge. Some kind of wedge is forming here still. So
on the daily,
yeah. So I'd go for it down here. So
hey Dale, your microphone's a little muted or quiet.
Oh, you know why, Blake? Because when I drink, I can't. I move it up, and I forgot. So all right, thank you for telling me. Better now, right?
Yes.
Yeah. Better.
Yeah. Okay.
You on a whiskey already, Dale? I know it's Friday.
Yeah. Cup of coffee. Chase it with a little whiskey. So
coffee chaser.
Anyway, what? How about you, Blake? Hasn't this been kind of a chop fest this week?
It has been, and actually, good morning. And
good morning,
first of all, I want to go back and really quick revisit the euro sterling, and it's just, this is a pair that I actually am long, and I know. And then I hear you guys are, I know you guys are bearish. I know Stelios thinks we're going to 83, and I know Ryan has a long-term short here. One thing I'm still hanging my hat on is the false breakdown that happened back in August. We pulled back to, we're about 50% retracement right now, and our position's not big because I exited some of it higher, not quite 86 pence, but up here in the channel. So, my cost average is at 60. So I don't mind adding to it, but I just would rather stay above 85 pence at this point. But we have come out of this channel, and obviously following the ECB yesterday, it sold off. But one of the other things I want to point out is also the sterling itself. The pound's higher, and there's a lot of bulls out there right now with the sterling. And I think one of the things about the cable that, we should all pay attention to, or all keep in mind, is it's going to act better in a risk on environment. And right now stocks are moving higher. Stocks are higher this morning because, Biden and Xi talked. And so that's that goosed the markets going into the weekend, where we had a very weak close yesterday, actually, in equities. So, when you see stocks, at their highs at the end of the week, or not at their highs, but, we're rallying obviously today, right off of the lows, it's going to keep the dollar under pressure, and currencies like the sterling are going to act a little bit better. And you have the euro. Somebody asked yesterday, like, why is the sterling so strong? And I'm like, I think a lot of it's euro sterling weakness at this point. And right now, I think the sterling could, trade right back up to 140. So you have to, think about that. I don't think that trading up to this top of this range is uncalled for with the pair right now. And I guess the other focus today is the dollar Canadian. I mean, we have, I actually picked up some dollar Canadian yesterday right here at these lows. I literally got a couple pips off the lows. And I'm still long. It's very small, but I picked it up yesterday. And I'm like, oh, look at me! I'm up like 30 pips, and I didn't do the smash and grab, which I should have, right? And instead, I sat in it, and I'm still sitting in it. It's like I said, it's really small, but it hit new trend lows today, or in Europe, ahead of the Canadian jobs report, because we have risk on. So as you have risk on, you're going to see that type of activity. So do you guys have any expectations with the Canadian jobs report today? Other than we just have to pay attention to it. And one thing I guess I have to point out too, price action wise, is we made a move above the 127 level, and then just which is a big failure, and you can see these big failures up here. But anyway, sorry. Do you guys have any expectations for today's data?
I think it's potentially looking like if it gets another positive result, plus numbers, then that's going to start indicating the start of a decent trend in the jobs. And I've read a lot of commentary this morning about Tiff's speech yesterday, potentially opening the gate for another taper. So, good numbers today, and we could see, CAD getting back down to sort of the low 125s again.
And that may be the case. I mean, there's a lot of support here in the dollar Canadian. I'm specifically me, just because I'm long a little bit. I'm just paying attention to this little trend line here, because I don't want to be long if we're back below this 125 and change, because then I think we're going to be trading back towards 124. And this is such a big failure here. And like I said, I wish I was really paying attention that day, even though I was in front of my computer. I was focused on, I forget what I was focused on that day, that we hit that underside of that trend line. Anyway, if we get below like this, you can see the 50% retracements right here at around the 125 level. Trading back down towards 124 is probably, realistic. You got the 200-day moving averages sitting down there too. So, lots of support down here. But yeah, if we get down, in the 125s, I mean, things could get a little squirrely for the dollar Canadian. So anyway, just something I'm going to be watching going into today. And I have to say, let's take a look at the markets here. I was in the chat room when I got up this morning. I'm like, well, here we are. Markets are stronger. We're recovering. And I thought, well, yesterday we were closing on the lows. And you can see how the S&P closed like literally on the lows right here. Nasdaq was weaker. The Dow actually closed below this trend line. And actually we had the DAX was, trading weaker yesterday. It was right here. And I'm like, hey, maybe that sets us up for a good, like little bit of risk off into Friday, takes us back to the 4460 level. But the fact of the matter is, we're still in a very strong ascending wedge in the equity markets. We really have to remove, risk aversion from our vocabulary, is what I was saying in the chat room. It's like, why even expect it while you're up here? But did you guys have a chance to listen to the Mark Chandler interview yesterday?
Yeah, I did. Yeah.
Yeah. Did you catch the part about Brown Brothers?
In the end, yeah. That's they're getting out, right? So basically they've ridden this thing for 30, 40 years, and now they're getting out of the market, but in essence. So really, this is showing a very bearish view going forward from their side.
And it's not one of those like, oh, just because they're getting out, that's the end. But like he pointed out, there's some really smart people. Like like when you like think, oh, who are the people that really run the world, right? You know what I mean? Like who are the people behind the scenes that are pulling
the wives of everybody.
Aside from everybody's wives, who's pulling the levers behind the global economy? But in my opinion, and this is just my opinion, it's institutions like Brown Brothers, not necessarily them per se, but when the smartest people in the room are like, I'm going to take my chips off the table. That's where you have to go, huh? So what the conversation that, and I hope you guys get a chance to listen to that. And matter of fact, let me go grab here. If you go to, you guys can see my screen. So if you go to Traders Summit right here, and you click on, he's right on the cover here. I'm going to grab this link and I'm going to put it in our chat box for everybody that's listening in right now. This is going to go to everyone. Make sure you guys watch that video, because and that the interview is just right here. Okay. The conversation that happened after I turned off the camera and I hit stop record is, we sat there and we talked a little bit about that. And I go, damn, Mark, that's some pretty big news. He goes, yeah, that's the kind of news that, we're going to have a conversation a year from now and go, huh, we should have known that. Right. And I'm like, yeah, that's, he goes, the fact of the matter is you just got, players that have been in the market for 30, 40 years that are just like, yeah, we're done with it. We're taking our chips off the table. We're going to, we're going to reassess. And that's pretty big in my opinion. So anyway, but I don't want to get you guys all, oh, we should short everything right now. It's time to short equities right now. No, that's not it. But, when you have such a massive run, I mean, I saw something about, this is interesting. I forget who tweeted about this yesterday. It's like we've seen the fastest double in the stock market of all time over the last year and a half. And
you have to put it in perspective though, because we did get a pretty vicious crash, and not a huge crash, but we got a 30% down before that. But yes, you're right.
It doesn't stop the fact that wasn't the fastest,
yes,
double, right?
It was, yes,
in the S&P ever. And then you have then you have all these Fed governors that are like, okay, I'm selling. I'm sorry. Oops, I made a mistake. I'm gonna go. I'll sell all my stocks now. Like if I'm Kaplan. And I'm like, okay, you got me. I'll sell everything. You got me. Good job.
That's
I'm the
shocking.
bad guy.
Yeah. Absolutely shocking.
Yeah.
If it got cleared, it all got cleared by the Fed overseers and the ethics committee. Yep, fine, you're doing nothing. So if you're doing nothing wrong, why, when it comes out in public, do you turn around and bail? You turn around and say, hey, you know what? It's all cleared. The trades are fine. Because if you didn't think it was a conflict of interest then, why are you thinking it is now? Just because everyone's jumping over it.
Yeah, optics. Yeah.
Yeah. So I wanted to. I was going to pull. I'm seeing if I can find the tweet. And I'm like, oh, this is, I mean, how crazy is that, right? Let's see if I can find it. I can't find it. Oh, here it is. It is Jim Bianco. I'm trying to get to his let's see if I can get over to his account. Bianco Research. How come I'm not following him? It was a retweet, but I thought I was following him. Anyway, I will. There we go. But he had a tweet here yesterday. You know, it's weird. Oh, here it is. After S&P has made its fastest double in history in 17 months, and these guys made a boatload of money, now they realize this was not a good look. Since they are out, the taper can begin, right? And you know, so you can see that I don't know. There's a lot of, I think there's a lot of warning signs right now that are telling us, hey, you know, you need to be really careful with risk, right? And I think that's doesn't necessarily mean you pull the plug today, but boy, if you guys are, you know, predatory like me, and I'm looking for a big move in the market, I think one's brewing here. And you know, I've always been in the camp that, you know, we're going to get a blast off and a, you know, melt up, or, you know, it's going to be an epic reversal from this wedge. So I think we're coming to a head sooner or later, and probably sooner rather than later. You know, this wedge is coming to an end, and the market's going to have to make a decision. So anyway,
it looks like they might prolong it a little bit more. You saw the headlines with that Biden and Xi are speaking now, so we're going to get some nice China related. Everybody loves that, right? China related headlines. And
of course, especially, you know, and you know, I'm glad you brought that up. I was talking to Eric Bosmajian. Yeah, he's from EPB Research, and Dale, you interviewed him, I want to say a couple months ago. Really sharp guy.
Yeah,
and
he's been on a few times.
Yeah, I did an interview with him yesterday. He's you know, a friend of like Lynn Alden and stuff. And
yeah, okay.
You know, I was talking to him yesterday, and he was like, we were talking about growth slowing and going into a slow growth cycle. And then we were talking about our imports and the slowing imports. I'm like, yeah, you know, it's slowing right into a China slowdown. And he's like, ooh, that's my next thesis. And, you know, so we're going to do another video with him like a couple of weeks from now. He's going to write up this thesis about how growth is slowing into, you know, China's slowdown. But I mean, the fact of the matter is China's really starting to slow down too. And so, yeah, the talk between, you know, the US and China is trying to turn things, right, Stel?
Yeah, I hate it. We're back to the same stuff.
Yeah. Anyway, hey, we're a couple minutes. I haven't heard from Steve, or we have.
He's not here. I don't know where he is, but he's not on the panelists.
Oh, that's weird. I thought I'm like, I haven't heard Steve. Usually you hear him by now.
Oh, Velo is. Come on, Velo, say something. No, I'm kidding.
No, but we have Canadian jobs report coming up in less than a minute. So let's turn our attention to the jobs report here. Let me first of all go to ForexAnalytix, go to the calendar here, open data flash, and so we can have our Canadian news.
Don't forget PPI as well, US PPI.
Oh yeah.
Yeah, that's actually more important, isn't it?
I'm paying attention to the Canadian jobs, I guess, maybe because of positioning, but yeah, pay attention.
By the way, this morning we got Norway CPI 3.4% year on year, up from 3%. So again, same pattern. Inflation is rising and it's staying high. So, okay, let's see. 5 seconds. CPI is expected 8.2% year on year, came in at 8.3, so all green in the US, only marginally though.
Canadian employment,
yeah, marginally lower. It's not something big.
No.
Nope.
No,
it's
the
an
dollar's
event.
not really moving a whole lot. I think the unemployment rate here at 7.1% really helped. Is helping the Canadian currency actually drop through lows, and we have to be real careful here because this is the 618 retracement here at 125.95. So just 95.96. So just watch the dollar Canadian. A daily close below here is not going to be very bullish. This is going to, spur some activity back down towards 125 and change. Euro's holding up. So the producer
participation rate fell, so that kind of explains a little bit the drop in unemployment rate.
Yeah. All right. Well, the dollar is not doing a whole lot at the moment. Not a lot of reaction.
I'd call that a positive report. I'd call that
What's
a positive report. That's a positive report.
Yeah.
Despite the unemployment rate, it's the third run of gains. Both components are up, full-time and part-time, so that says jobs are strong. I think that's good for the CAD.
You know what's funny though? I'm just gonna tell you this, in my opinion, is the Canadian currency is notorious for reversing on data days. So when you have you look at the Canadian employment data and you go, man, that was good. Which I agree. We had the numbers themselves that how many jobs did we just create in Canada? 90,000 jobs. Yeah. That's a good number. Unemployment rate 7.1%. That's a great number. We're expected 7.3. We just came off of 7.5. Great numbers. These are the days, in my experience, that you see the Canadian weaken. I don't know why, but it's like you go, man, that's great data. You buy the Canadian dollar and it's up in your face like by the end of the day. And I wouldn't be surprised if the dollar Canadian trades back at 126.25 by the end of the day. I've seen it 1,000 times trading the loonie. That's why they call it the loonie. I'm not saying that that's going to happen today. I'm just saying that happens a lot. So
what? That happened right after the BOC, didn't it?
Yeah, I mean it happens all the time in the Canadian. So I'm always in the camp with the dollar Canadian. I never chase it on data. I just don't. I don't. It has to be shockingly, unexpected for me to be chasing the Canadian anywhere. And chasing is never really a good idea anyway. So let me ask you guys this. So here we go into Friday, another week, new, a lot of volatility starting to come back into the market. You're starting to see traders, make their way back in, and we're starting to see an uptick in volatility, which is great. That's what we want to see. What are you guys looking forward to, going into the fall season? Because these are the conversations that every asset manager and every
lower temperatures.
Oh my God. It was so hot last night. Our temperature automatically drops in our house down to like cooler levels so we can sleep better at night. It's just, we have our nest set that way or whatever, but it is ridiculously hot right now. And it was so hot last night. I was like hot. I just couldn't even, it took me forever to fall asleep. So I'm with you. But what can we be looking forward to, guys, in the next, week or two for the market, aside from the FOMC? What else do we have on the horizon that we need to be keeping an eye on? Any thoughts or ideas?
That's a good question because the FOMC is going to rule everything.
I do too. I do believe that as well. I think that the FOMC is by far the most important. Are we going to get I'm sorry, I'm trying to swat a mosquito. Somebody just got paralyzed with West Nile in my neighbor. Sorry, there's a mosquito running around here. Did you guys hear me trying to whack it?
Yeah.
That was easy. It's gone. Okay. So sorry. What else on the horizon aside from the jobs report? And by the way, and I want to talk about precious metals when we're done. So anything else?
Talking about the Fed in September, we've had an article out from the WSJ this morning saying that November is the meeting. So are we gonna shove shove the set meter into the sidelines now.
Well, the people are thinking that September is the setup, right? It's the tee up, but the tapering is not going to start until, I don't think anybody thought tapering was going to start September. September was like, we are going to announce that basically that it's coming. I don't know. But maybe that is the case. But most people expected the taper to start by the end of this year, right? So I mean, that's really where we're at.
Yeah.
Okay. Well, one thing that I did want to talk about, since you guys were having the conversation a little bit earlier, was precious metals. So here's the precious metals, and as I mentioned, we and Stelios is right. We were having this conversation in the chat room. I said, you know what? If I was long precious metals, and this was not, trying to bash anybody who's long or anything like that, because I'm just not paying a lot of attention to it, other than the fact that it's just not acting very well. So, I've sat here for, basically for the last 2 weeks thinking gold really should be trading well above this 1835 level, above this resistance. And I'm surprised that we haven't. So I think, if you're long from a trading perspective, and you're thinking more shorter term, not like the Stelios, I'm putting gold away for the next 400 years, that type of view, but somebody who's tactically long gold over the last couple weeks, waiting for gold to spike back up above 1900. But I find it very disappointing that we're not at this point in time. And I think, and that's why I'm really starting to focus on the support here at this 1770 level, because man, if we break below that, I think we're going to revisit these lows. How many people are trying to play this, double bottom? This move should extend itself higher. I'm a little concerned with the gold price action right now. What are your thoughts? Stelios, I heard your thoughts earlier. Ryan, do you have any thoughts on gold right now?
Yeah, I mean, my question would be, what happens if we do get into stagflation next year? What does gold do? Because often said to be used as the inflation hedge, but what does it do in a lower growth but high inflation environment? Do we see it explode up as a safety haven? I'm unsure what to do with that.
So is your base case right now stagflation?
Yeah, that's my big risk for next year.
Do you think it's a big risk for next year? Now I'm just going to go into my conversation I had yesterday with Eric, and you guys have to listen to that. That interview will be out this morning, probably within the next hour or two. It'll be out for you guys to hear, and I'll retweet it and stuff. So just if you follow me on Twitter. But we had a lot of conversations about inflation. That was our topic of conversation yesterday, and it's going to be interesting to see if these inflationary pressures recede or not. And I we had specifically the conversation about inflation running hot and then easing off, but does that leave prices high, or do prices actually start to come down? And I think that's going to be the difference between stagflation or not, right? Because I think that we are going to deal with inflation, or with slower growth. I think that's going to be an issue coming off of this big, amount of stimulus that we had post-COVID. That's, without a doubt, but, will inflationary pressures stay persistent? And I think that's the big question mark right now, which is the difference between, stagflation or not. So, and I don't know what gold's going to do. I don't know if gold rallies in that situation or not. What do you think, Stelios? Do you have any opinion there?
I've said this many times. I think for me, the one factor that drives gold and silver price is the change in money supply. That for me is number one. Okay, yields, dollar, inflation, growth. Yes, all these have short-term effects, but really what drives it is that, because the dollar-denominated asset is a real asset. And if you have $1 trillion circulating, and a million tons of gold, whatever, and then $1 trillion becomes 20 trillion, then things have to adjust. They're not going to adjust from one day to the next, obviously, but they're going to adjust. So for me, that's the main factor. Now, if we do get stagflation, or if we do, any kind of inflationary environment, theoretically should be positive for metals, but we're at the point where we're all worried or scared or waiting for the taper and for tightening. And we know the tightening in the short term is not good for metals. End of story, because the dollar is going to rally, yields are going to rise, et cetera, et cetera. So I think that's why metals are not performing. And I have to admit, I am very bullish metals in the medium term, but in the short term, I think they're going lower. That's why my position is small. I always want to be long some, but that's why it's small, and I'm waiting. So I think gold breaking down the way you talked about it, I think it's the most likely scenario. Now, if you ask me, why don't you just get rid of all your positions and wait for that? I said it's the most likely scenario. I didn't say it's the only scenario. And I always want to be long gold and silver for sure. So I've started very slowly. I'm tracking it, and ready to add as and when it breaks higher or lower.
Yeah. And, look, I think having, gold and silver long exposure in this environment makes a lot of sense. My question is, why is it just not acting well? And that's the bigger question that I have.
It's a taper scare, or people are waiting for that. Is not certain, or let's say the extent of the taper is not certain. We might get a hawkish Powell at some point, and markets are gonna crap their pants, and so are metals. So I think people are scared of that a little bit. Plus, you've got lots of funds and lots of people who are moving into cryptos and have been. So, and you've talked about that. You talked about that from the beginning, Blake. And in the beginning, I was saying, no, I don't think so. Well, it turns out they are. So you were right.
Yeah, and the thing, talking a little bit about crypto, I just happened to pull up, some of the action that we saw in Bitcoin and Ethereum this week. I'm sure it's pretty scary for bulls. I mean, we saw a really big, 25% move in Ethereum earlier this week, and it's freaked out bulls enough in these larger crypto coins. It's freaked them out enough to keep the bulls at bay. You see some of these like Sol, just ripped higher this week. So people are looking for alternatives at the moment. But I still think you got to watch some of these bigger names, and Bitcoin, Ethereum specifically. Even the Litecoins of the world. They're not acting really well right now. And the question will be, and this is what's going to be really interesting to me, is if you see cryptos sell off, will that put a bid in gold and silver? I actually believe it will. I agree with you. I agree with you. Yeah, great. I actually think if cryptos, sell off, let me just put it to you this way. I still think that Bitcoin's, has the ability from current prices, and this is not for every crypto, obviously. This is just, from here. I think from current prices, we could see a 40 to 50% decline. I think we could see these lows again. I think we still can see 20,000. I don't think that's off the table at all. And if that does happen, and we do see a bigger move down in cryptos, I think that does throw in a bid in precious metals. So I think that money is going to find a different, it's going to look for a different home. So anyway, again, some things that we should obviously be watching. And I guess I'm going to go into what we can do, since it is Friday, probably just wrap things up and go into the morning edge here in about 30 minutes. Dale, did you have anything else for us today?
I think that the big event coming up is once this dollar correction to the downside plays out towards 91, when and if the dollar turns up again for that move to 96 or so, is when I think you're going to have pressure on risk.
Yeah, and that,
there's still some time.
Talking with your buddy Jim, matter of fact, I'll have a conversation with him again this morning. And for those of you guys that missed Jim Welsh, it's a friend of Dale. Dale, how long have you known Jim?
Gosh, I don't know, 30 years.
Yeah, and he's amazing guy. Love listening to him, and he's the nicest guy in the world. And I talk to him every Friday. We put out a video, and he really puts all the puzzle pieces together. I urge you to go sign up for his newsletter. But he really thinks that the dollar index, he thinks that it may have bottomed here at 92.
Yeah,
but
that may have been it.
Yeah, he thinks this might have been it. He's not 100% sure, but what he is really sure of is the dollar index is going to trade back towards 100 eventually, and he believes it's going up here somewhere.
Well, that's a wrecking ball. That's a wrecking ball.
Right. Exactly what you're saying is that, to see the dollar do something like that, it would bring in that dollar milkshake theory, if you will, and would really be, in your words, Dale, a wrecking ball to the market. So we'll see it. It's obviously not happening today, but it is something that, keeping the dollar in a tight trading range. That's where we're at. But if we start breaking above like this 92.80 level, this is the 50% retracement. That's going to start opening the doors for upside again. I think a lot of people are trying to lean into this dollar strength recently, and they're having a difficult time. You've seen the dollar rally from 89 to 90, 93, 89 and some change to 93 and some change. A lot of people trying to sell up here, especially with stocks at all-time highs, and they're having a difficult time, trying to keep a lid on the dollar right now. So
did you see, Blake, did you look at the DSI in gold and silver? It dropped again. I mean, it's like, gold has really recovered quite a bit from that flash crash. And, I could see the weakness, but the DSI readings makes me, rather than want to sell rallies, like that was a great sell early in the week, but DSI has me wanting to look for a spot to buy it, because there's no enthusiasm at all for gold, at all. And it's not like it's 1680 or anything.
Yeah, you can see some of the precious metals right here, such low levels, and it's like
for a long time.
Yeah, you're right, for a very long time.
So that makes me a little bit nervous to be too bearish on the metals. Short term,
I hear what you're saying. I do hear what you're saying. By the way, dollar Canadian new lows on that strong employment data. So
I want to thank the team for the great job that they do here in F.A.C.E. And throughout the day to build up and edify all our members to, this is not an easy thing to do, to be a trader. So, having the support of professionals working with you, I think is going to make a difference, because here's your choice: pay the market or pay for education. And I think it's much cheaper to pay for education than to pay tuition to Mr. Market. Great job, ForexAnalytix, best FX team on the net, in my extremely accurate and very humble opinion.
Seconded. And obviously, big thanks to you, Coach, for leading the charge, and all our viewers.
Right?
Thanks.
Yeah, and you do a great job. You do a lot of you don't even realize that you do some great coaching during F.A.C.E. every day, and Blake's the best at giving a live update of what's going on in the market, and I try and bring in some interesting people to give you some ideas, and Steve on the back end doing a lot of work, and the whole crew. And I want to thank all the people in members chat that are dedicated, that come in and help others that need some direction. And just think it's a great community, and glad to be part of this whole thing.
And
So-
you know what, Coach, we are very fortunate to have you here, and thank you for being part of it. And as Ryan said, thanks for leading the charge every day and bringing in interesting people. So, yeah,
it's fun.
You guys,
above all, it's fun.
It is, and thank you all for listening in every day, and you know, visiting our webinar sponsor at Forest Park FX and listening in, interacting with us, and look forward to next week and a good season of volatility.
Amen.
Amen to that.
Amen.
Yeah.
So don't just count your pips, count your blessings. You guys know how I feel about Friday. If you're considering becoming a subscriber, it's a great day to do it. You have the whole weekend to, you know, navigate and get used to it. And this was kind of a half week with Labor Day. I really do expect things to get into full swing next week with a full week and lots of data. Do we have the Fed next week? It's not next week. It's the week after.
Yeah, week after. Yeah.
Yeah.
I think it's
Okay,
CPI on Monday.
Yeah. Okay. So anyway, get prepped. You have great research from all the guys that Blake's showing right now. It's one of the best teams on the net, and whatever the basic technical by Blake and the harmonics by Andre and Elliott Wave by Grega. I mean, you know, you can't find all these different methodologies on one site. Usually would have to go to a few. So you guys know how objective I am about thinking ForexAnalytix is the best place on the web to trade. So that's it. That's the end of my pitch.
All right. Thanks, Dale.
All right.
And
All
thank
right, guys.
and Stellios, thank you for being the most sappy person on the face of the planet. We love you, man.
Sappy, that's me.
We're tied. We're tied still. Don't worry about it. I'm with you. It makes me cry just to think about it.
Oh my God, I gotta go.
Thanks, everybody.
All right.
Cheers, guys.
Adios,
Have a good weekend,
everyone.
all.
Bye, guys.
Have a great weekend.